Hey everyone, today, I want to share a few tips on how to legally reduce your tax burden. Before we start, I have a simple request. If this video helps you save money, I ask that you enjoy those savings. Treat yourself, or even better, use some of that saved money to help someone in need. For me, it's about keeping more of your hard-earned money in your pocket rather than handing it over to the IRS. After all, we all know it feels better that way, right? Now, if you're making under $400,000 a year, this video is especially for you. There are plenty of strategies available for those above that threshold, and once you hit the $1 million mark, there are even more complex options and gray areas. But today, we're keeping it simple and focusing on those earning less than $400,000 annually. Let's be honest, there's no magic bullet that will eliminate your tax liability entirely. Those kinds of tricks involving offshore entities and teams of tax attorneys are reserved for billionaires. We're not covering any illegal strategies here. This video is all about the legal ways to lower your taxes. So, if you're looking for loopholes that cross the line, this is not the place for that. Instead, I'll teach you how to save on your taxes legitimately in ways that add up over time. Think of it like collecting small savings that eventually turn into significant amounts. So, let's get started. Tip 1. Commuter benefits. Many workplaces offer commuter benefits, so take full advantage of them. For 2024, you can use up to $300 per month tax-free for commuting expenses, which adds up to a $3,600 tax deduction annually. This applies to public transportation like trains, subways, buses, ride-shares such as Uber or Lyft, as well as parking fees. It's an easy way to save on your taxable income. Tip 2. Retirement plans. Always make use of retirement plans offered by your workplace, like a 401k or 403b. A 401k is typical for for-profit companies, while 403b are common for government or nonprofit workers. Contributing to these accounts reduces your taxable income for the current year, and it helps you build a solid retirement fund. There are other retirement plans, but these two are the most common and effective. Tip 3. Health Savings Account, HSA. An HSA is a great tool for people with high-deductible health plans. Money you contribute to your HSA is tax-deductible. Think of it like a savings account dedicated to medical expenses. When you spend the funds on qualified health expenses, you won't pay taxes on that money. Plus, you can invest the HSA funds, and any earnings or interest are tax-free. It's a triple tax advantage. Tip 4. Flexible Spending Account, FSA. An FSA allows you to pay for certain healthcare expenses with pre-tax money. Just keep in mind that the FSA has a use it or lose it rule. If you have money left in the FSA at the end of the year, you might lose those funds unless your employer allows a rollover. Tip 5. Dependent Care FSA. With a Dependent Care FSA, you can pay for childcare expenses with pre-tax money. This applies to care for children or adult dependents. It can be used for daycare, preschools, nannies, day camps, and even adult daycare facilities. Tip 6. Capital losses. If you've had losses from cryptocurrency or stocks, make sure to report them. Losses are tax-deductible, which means they can reduce your taxable income. You'll usually receive a 1099-B for stock losses, but many people forget to report their crypto losses. Don't leave money on the table. Tip 7. Long-term capital gains. Holding on to stocks or cryptocurrency for more than a year before selling qualifies you for long-term capital gains rates, which are much lower than regular income tax rates. In fact, if your income falls below a certain threshold, you could pay 0% on long-term capital gains. Tip 8. Review your 1099-B tax form. Your 1099-B is your stock market activity summary. It's important to review this form for mistakes, like missing purchase information, which could cause you to pay more in taxes than necessary. If the cost basis of a stock is missing, it could look like pure profit, leading to higher taxes. Tip 9. Margin interest. Don't forget to deduct any margin interest you've paid on investments. This is often overlooked because it's not always listed on the cover page of the 1099-B. Tip 10. Gambling losses. If you receive a W-2G for gambling winnings, you can offset those winnings with your gambling losses, like those from table games or sports betting. Just make sure you keep records. Tip 11. Traditional IRA. Outside of workplace plans like the 401k or 403b, a traditional IRA can offer a tax deduction depending on your income and filing status. It's another way to build retirement savings while lowering your taxable income. Tip 12. 529 plan. Saving for education? A 529 plan can help. While you may not get a federal tax deduction, many states offer a deduction for contributions. Plus, the earnings grow tax-free, which can be a big win when paying for educational expenses. Tip 13. Fix your W-4 payroll settings. If you usually owe taxes when you file, you might be facing underpayment penalties without realizing it. Adjust your W-4 to make sure you're having enough withheld from your paycheck to avoid these penalties. Tip 14. Minimal rental use rule. If you rent out your home for 14 days or less in a year through platforms like Airbnb, the income is entirely tax-free. Just make sure you report it properly to avoid paying unnecessary taxes. I hope these tips help you keep more of your money and pay less to the IRS. Remember, if this video helped you save, take a moment to enjoy those savings. Treat yourself, treat someone else, and feel good about keeping your money in your hands. Don't forget to subscribe, and I'll see you in the next video. Take care.